Okay, I've got it recording. I'm sorry, I'm not used to so many Zoom accounts.
Of course, thank you. Okay, so let's go ahead and get started. We're going to go over just the agenda for today, and this also includes tomorrow because it depends on how far we get today. And then we'll finish up tomorrow. So first of all, we're going to talk about the requirements to earn RCH credits for being here for each of the study group sessions, talk about the fall testing information, and then we'll start into the actual concepts, which are introduction to payroll, employees versus independent contractors, verification of employment, the Fair Labor Standards Act, and employment forms. So the very beginning of payroll. So for each session, in order to receive your RCH credits, we have to keep track of certain pieces of information, and we have to prove that you're participating for the American Payroll Association. So in order to receive your RCH credits for each session every day that you sign into, go ahead and type your full name into the chat Zoom window at the beginning of each class, and that is going to be our record of your attendance so that Manon can keep track of that. And then for each quiz question that we ask, you're going to type your name with the answer into the chat window. I know sometimes there's multiple of you in a room, so go ahead and make sure that everybody's names are on those answers so we know that everybody is participating. Again, this is required by the APA. This is not us just being mean. We do have to provide information and prove to the American Payroll Association that everybody is participating in order to receive those RCH credits. So for the fall testing window and information, which is the testing session that's coming up here very, very quickly, registration started on July 7th and runs through October 8th. The exam window is from September 11th through October 9th of this year. In order to register, you do have to pay your fee. If you're a member, it's $380. If you are a colleague, it's 550 members, or non-members, also $550. So you will have to pay that in order to get registered for the exam. Manon did send you guys out a link to this PowerPoint. I did do some updating for it. So after the session tomorrow, once it's fully updated, we will send it out a new PowerPoint for you so that you have the most up-to-date one, but there is a link in there that you can use for the registration. The exams that are administered this year from September 11th through September 9th of next year are going to feature questions that are based on federal laws and regulations in effect as of January 1st of 2021. Any mid-year legislative and regulatory changes are not affected on that year's exam. Make sure that you also, if you do register for the exam, download the CPP or FBC handbook from the APA website, as it has important information about the exams as well as good example questions at the end. I did put 2 links to those as well on this PowerPoint. So this is for the CPP exam. This is an outline of what is on the exam. So there is 24% of core payroll concepts, 16% in compliance research and resources, 20% calculation of paychecks, 12% payroll processing and supporting systems and administration, 10% payroll administration and management, 9%, and I can't see the top of my PowerPoint, hold on, 9% audits, and 9% accounting. So, and again, that is for the CPP. And there's also additional information as to what specifics are in those, but I'm not going to read those for you. You can read them. The FPC has 29% core payroll concepts, 17% compliance research and resources, 24% calculating of a paycheck, 7% payroll process and supporting systems and administration, 7% payroll administration and management, 8% audits, and 8% accounting. So again, CPP versus FPC, a little bit different. I think most people that we have on here are going for their CPP versus their FPC, so that would be the one you want to focus on. So Manon and I kind of discussed this. We do have a pretest that we have available to you guys, but we kind of want to ask you if you wanted it or not. The pretest that we have is based off of 2020 federal laws and regulations because we didn't have the access to the 2021 information as of yet. So we haven't been able to do a new pretest with that information. So even though it's on the 2020 information, it would be things like social security limits, things like that, that would be different. But it would also, still give you a good opportunity to be able to test your skills and see what types of questions are on the CPP exam. So in the chat, if you guys want to let Manon and I know whether you would like us to send that out. If so, we will send it out after class, and we will also include answers so that after you take the pre-test exam, you can quote unquote grade yourself to see how well you have done. Perfect. Thank you. All right, so let's jump right into it. So we're going to start just, general payroll concepts to start with. So employment forms that are going to be asked for, or you as an employer need to ask for from your employees. First and foremost is going to be your Form I-9, which is your employment eligibility verification. And it's also, that document is going to request additional documentation to be provided by the employee to prove that they are authorized to work in the United States. The Form W-4, which is the employee's withholding certificate. And then you could potentially need to also ask for a state withholding form, depending on the state. Some states have specific forms. Arizona, I know, has one. Pennsylvania, I think, has one. Colorado does not specifically have one. So we generally just use the federal form W-4, or they can complete a second federal form W-4 and write for Colorado at the top of it. And then you can use that for Colorado withholding. So there are some states that are like that. Other states have specific withholding requirements. Just a reminder, the CPP exam is based off of federal laws. It doesn't go into state specific laws. That being said, it does require you to know what information might be asked for or required by state law versus federal law. We'll get into more of that later, but just a heads up that we focus more on the federal laws because we can't get into the individual state laws. Anytime you're asking for information from your employees, you always want to ensure that you keep the information secure and make sure that it doesn't get released or into the hands of somebody that it shouldn't. So make sure that you're keeping it secure. So the first form is the I-9, and we've all seen it. It's big and scary. And basically the employee has to complete the first portion of it. And then the second portion is for the employer to complete. And the employer must physically view or examine documents that are provided by the employee. Have to be a touch careful with the I-9. You cannot tell them which documents to provide you. You can only provide them with the list and ask that they provide you with documents for those lists. So they can either give you one document from list A, or they can give you a combination of documents from list B and list C. So most generally, from what I have seen, employees usually use some sort of driver's license or identification card from their state, and then their social security card. That being said, that's just what I see most often. That's not required or anything. They can also use just one of the ones on the single side, the list A, like a passport or things like that. So again, you just want to be careful. You can't tell them specifically what to use. You can just give them the information and then they have to determine what they're going to bring to you. With COVID last year, they started making an exception to the actual physical. You didn't have to physically examine the documents that they provided to you because of the whole social distancing. Everybody was working from home type of thing. Last I knew, it was still required that once the employee started coming back to work or you were physically able to, you still needed to physically examine those documents. I haven't seen much more guidance out on that recently. That's kind of the last I knew. So that's the employer I-9. The social security card is one of those documents that can be provided as proof of the employee's eligibility to work in the United States. It is not required, but it is one of the most common documents that the employees can provide to you. So one of the big things is that if you receive a notice that an employee has provided you with an incorrect social security number, then you as the employer are required to make at least 2 annual solicitations for the correct social security number. You just want to make sure that that's documented. So in other words, if you get a notice that says, hey, this employee's name doesn't match their social security number provided, you need to make sure that you document that you reached out to the employee at least twice before December 31st of the year in which you were notified that there was a mismatch, to make sure that you're in compliance for the IRS. So a couple of ways that you can check your employee's social security number versus what name they have provided you. Most common one that most of us are pretty familiar with right now is E-Verify. It's verification checks of the SSA, the Social Security Administration, and DHS, Department of Homeland Security databases. It is not federally mandated as of yet for all employers, but it is mandated for federal contractors. So if you are employing employees for federal contractors, you do have to use E-Verify. There are some specific states that do require E-Verify. Like I said, we're not going to go into the specifics of which states those are, but it is important to be aware that some states do require employers to use E-Verify. And then I did put a link, if you're super interested, to the E-Verify website. There's a second way of looking up employee social security number or verifying employee social security numbers, which we'll talk about in just a minute. The second document that's really important to get from your employees is a form W-4, which is the employee's withholding certificate. It's used to calculate the federal income tax owed and deducted each pay period. So one thing that I did want to point out is up in the top, these are year specific. So this one that I have on the screen is for the year 2021, which is the current year. If you have an employee that's hire date is in 2021, you should also have a form W-4 on file that is from the year 2021. So we often, unfortunately, see employers that they print out 20 W-4s, so they just have them available to be able to give to employees. Well, that works as long as they're all for the current year. But as we all know, amongst many other things, events, craziness that happened in 2020, changing the W-4 was one of the things that the IRS did. It's very different than it used to be. And in my experience, employers and employees struggle with it a bit more, probably because they're just very used to the old version of the form. But anyways, this is our new reality. So that is important to get from your employees. The other thing that's really important to remember on these withholding certificate forms is that you as a payroll professional should never advise employees as to how to complete their form. If the employee does not know how to complete the form or needs additional information, then you should provide them with publication 505, which is the tax withholding and estimated tax, or refer them to the IRS tax withholding estimator. Employees should then determine for themselves the appropriate selections on the form W-4. Again, very important that we aren't giving that information to our employees or telling them how to complete the document, because it could result in the employer actually having to possibly pay for under withholding if you became their tax advisor and you advised them to withhold incorrectly or to fill the document out incorrectly. So you want to be really careful on what you say. It's okay to provide information, but don't tell them what to put on the lines or any of that. And then of course, once they fill out the form, you should always keep a document on file for the most recent W-4. And then we always recommend, especially, in your payroll software, if you have a human capital management software or anything like that, you keep a record of any time the employee changes their withholding. And again, make sure it's the employee making that decision to change withholding and not you as the employer. So the other thing is that back to that social security number, we want to make sure that those social security numbers that are on the W-4 is correct. And so again, I already talked about the E-Verify, but the other way that you can verify an employee's social security number is using the Social Security Number Verification Service, which is also available through the IRS. So that's the second way if you don't want to do E-Verify. Okay. Again, all new hires should complete these forms. If an employee fails to furnish and complete a completed W-4 form, then you as the employer must withhold as if they had checked the box for single or married filing separately in step 1C and made no entries in steps 2 through 4, or in other words, no adjustments. This procedure maximizes the amount that will be withheld from the employee and may motivate compliance by the employee to get the form W-4 to you if they want their withholding to go down. So if you don't have a valid form W-4, you have to withhold as if they were the highest level of withholding, which is that single or married filing separately, and then no adjustments down below for dependents or any other income or things like that. Okay. Be cautious about helping employees. I already talked about that. It's huge. If you consult with your employees to the amounts to claim in steps 3 or 4, you may be liable for penalties for under withholding. So it's very, very important. You want to make sure that you do not help them with that. Only give them resources to make them help make their decisions. So employees can change, they can amend their W-4s. And certain reasons that they would do that is if their dependents increase. So if you had an employee that adopted a child or had a birth of a child or something like that, then they can complete an amended W-4 at any time to increase their dependents. If dependents decrease, then the employee must file an amended form W-4 within 10 days. So examples of when that might happen are when an employee gets divorced or separated legally, if someone takes over support of a dependent, so if maybe the dependent moved and now the ex-husband or ex-wife is supporting it instead of the employee themselves. Maybe the spouse who was not working took a job and they are now working. And then the other reason would be if they can no longer claim exempt from withholding, and we'll talk about exempt forms W-4 here in a little bit. Employers are not required to monitor employees for changes that decrease tax liabilities. So you as an employer are not required to monitor if an employee is decreasing their tax liabilities. But if they do submit one to you, you are required to implement that new form W-4. Okay. So again, if they had the death of a spouse or a child, then that would change their withholding. They do not require, the IRS does not require the surviving spouse to file a new W-4 until January of the year after the spouse or child's death. Although the employers are not required to ask employees to complete a new W-4, it's sometimes advisable for you as an employer at the beginning of December to advise your employees that if they have had changes and they need to submit a new W-4 for the upcoming tax year, that they want to get that done. Again, not a requirement, just a recommendation by the IRS as kind of a, for lack of a better word, a nicety for your employees to remind them that they may need to change their withholdings. Employees cannot submit a revised W-4 in anticipation for a change. So if they expect to be married, they cannot change their filing status until after they actually get married. After a current, so when must you change the withholding as the employer? So after a current employee files an amended W-4, the change must be reflected in withholding no later than the first payroll ending on or after the 30th day after receiving the amended form W-4. That's the minimum requirement. Most employers don't wait 30 days for sure, but it must be done. So that could be a question on your CCP exam, is when it must be done by. So the IRS does not require employees to complete a new W-4 each year, which is why, as many of us are experiencing right now, we have a combination of employees that have a what we call pre-2020 W-4, which is the old type of withholding. And then we have some obviously newer employees that were hired within 2020 or 2021 that have the new withholding certificate. So the IRS doesn't say you have to do a new one every year. So you don't have to. So we have to accommodate both. And as we get into calculations of pay and things like that, you'll definitely see where the difference comes in for the different W-4s that the employee may have on file. The exception to when an employee must complete a new W-4 every year is if they're claiming exempt. So if an employee claims exempt, they have to reclaim exempt every single year. And the deadline for claiming exempt is February 15th of each year. So if you have employees that are claiming exempt, meaning no federal taxes coming out of their checks, federal withholding tax, not Social Security and Medicare. Social Security and Medicare are different. This is only federal withholding tax that we're talking about. They must complete a new Form W-4 each year and submit it by February 15th. You as the employer are responsible for monitoring that February 15th date and making sure that if you have any employees that are marking exempt on their W-4, that if they do not provide you with a new W-4 claiming exempt again before February 15th, that you have to change their withholding back to one of two things. You either have to change it back to their whatever they claimed on the most recent W-4 that you have that is not claiming exempt, or if you do not have a W-4 that does not claim exempt, then you have to move to that single or married filing separately with no adjustments below, because that's the highest withholding tax rate. Okay. Questions on any of that? Luckily, I think it's the exception to the rule that employees claim exempt versus the most common thing that happens. The other thing is the new W-4, as ugly as it is, it makes it harder for them to claim exempt because there's not just a little box like there was on the old W-4. So I think we have less employees that do that now. So, invalid forms W-4 are also important. I know I had questions on this when I took the CPP exam back in 2019. Gosh, it's been a while, hasn't it? If an employee completes a W-4, but it becomes invalid, and the way that it can become invalid is if there's any alteration, addition or deletion to the language of the format of the form, especially with regard to the perjury statement down at the bottom. If the employee did not sign or date the W-4, it is invalid. It is also invalid if the employee indicates in any way to you that it is false. So if they're standing in front of you and they fill out the form and they tell you they don't have any kids, but they put $10,000 on that dependents line, that is an indication to you that they just falsely filled out that document. So that's kind of hard, but technically, if they indicate in any way to you that that form is not valid, then you have to reject it and they have to complete a new Form W-4 that is valid. And if they do not do that, then you have to withhold at that highest rate. So single, married, filing single, married, filing separately, and no adjustments in steps 2 through 4. The perjury statement that we were talking about is very important, and it should and it does on the form. It does say under penalties of perjury, I declare that I have examined this certificate and to the best of my knowledge and belief it is true, correct, and complete. So that's on the Form W-4. Just make sure that you're using the actual Form W-4 provided by the IRS. Some of us that have fancy softwares have electronic versions of it, and as long as they're approved by the IRS, they will have that statement on there as well. So lock-in letters are also something that happens once in a while that the employer would receive from the IRS. And it is a notice to an employer specifying the federal income tax withholding for a specific employee. So I, in all of my years, have never physically seen one of these come in for any of the employees that I've had in any of the jobs that I've worked for. So I don't know, I don't think they're super common, but if you do receive a lock-in letter, then you must comply with it. And you must, as the employer, withhold federal income tax in accordance with the lock-in letter, beginning on the date specified in the letter But it is important that you do not start that withholding any earlier than the date. The reason for that is the employee has the option or the opportunity to challenge that lock-in letter. And so it may change. And so you don't want to change the withholding to whatever the lock-in letter is requiring you to change it to until that date that's specified on the lock-in letter. Okay. In addition to the lock-in letter, the IRS will also send with you an employee notice that you can give to the employee. They will also mail one to the employee's last known address, but they may not have the most common address or may not see them on a daily basis like you do. So they also provide you with a copy of it so that you can give a copy to the employee to let them know what's going on. Again, haven't seen any of them physically in my life, but I do know I was asked a question about the lock-in letters on my CPP exam. So, all right. So now that we've done some of the stuff before we actually paid the employee, now let's talk about actually paying the employee. So common methods of payment for employees, the two most common are going to be checks and direct deposit. Most employers offer both of those methods. If you do not have a check or direct deposit, you can be paid by a pay card or a payroll card. They're coming out with a lot of those different ones recently, and they're basically like a credit card that has your payroll funds get loaded onto, and they can be used like a debit card in the store. And then cash, I would say it's pretty unusual, but you could pay an employee in cash if you wanted to. So again, check and direct deposit are going to be most common. For employees that we pay, we have to withhold taxes. Employees working in the United States must pay federal income tax. They must pay employment taxes, which include both Social Security and Medicare. They must also potentially pay state income tax. This depends on where the state is or where the employee is working. There are a few states that do not have state income tax. The ones I can think of off the top of my head are Wyoming, Washington, Alaska, Texas, South Carolina, New Hampshire, I think. So there are some states that do not have state withholding tax. So you obviously do not have to withhold if the employee is in those states. There are potential other state taxes that you could have to withhold, local taxes. Anyone who's ever employed anyone in Ohio or Pennsylvania is very familiar with local taxes. So you may have to withhold those from your employees depending on where they work and where they live. One of the local taxes that we deal with here in Colorado is some of on the eastern slope, Denver and Aurora. They have some local taxes that are occupational taxes, and they're generally not very much, but they are an additional tax that you as the employer are required to withhold from your employees and potentially pay a portion of as the employer and then remit to the tax agency. Unemployment, we don't usually talk about that as much as an employee tax, but there are some states, Alaska off the top of my head, and I believe Pennsylvania, have an employee share of unemployment tax. Workers' comp, some states have an employee workers' comp tax. Washington, off the top of my head, they don't call it workers' comp, they call it labor and industries because they have to have a fancy different name for it. But there is an employee as well as an employer portion of L&I tax. Paid family leave, this one is becoming more and more popular, as we all know, but many states already have it in place. Washington is one that has it in place, Massachusetts, and your very own Colorado is implementing this coming in 2023 is when it will start being withheld from all of our paychecks. And in 2024 is when it will start being available to be used by employees. So, and I know there's a lot more states, it's just Colorado's top of mind for me. So there's a lot more states that either already have it or are working on something for paid family leave. And then disability, there's also a lot of states that are working on or already have in place disability, whether it's short-term. Washington has just implemented a long-term disability tax that will be taken out of employees' paychecks starting in January of next year. So that's also becoming a very popular one. So as you're listening to me blab about payroll, you probably think it's complicated. And as I speak, it's getting much more complicated because all of these different laws are different in every state and they're changing constantly. So it makes it very challenging. For all these taxes that we've been talking about, it is the employer's responsibility to withhold the tax from the employee's paycheck and then send the money directly to the tax agencies. So as we talk about payroll and payroll departments and what we have to do as payroll professionals, these are just a few of the things that are required of a payroll department. They must actually pay employees, verify the integrity of pay data, so we need to make sure it's accurate, collecting and potentially inputting time, inputting new hire information, keeping records, accurate records of all of this information, reporting payroll data, distributing paychecks and or pay stubs to the employees, creating automated clearinghouse files, which we refer to as ACH files. They must deposit and report payroll taxes. They must communicate with employees. They must balance payroll input. They must modify existing employee files for any changes that come down the line. They must reconcile payroll data. They must process deductions from employee checks that we haven't already talked about, things like medical insurance or, AFLAC deductions, anything that you may offer as a benefit to your employee. If there's an employee portion of it, then they must process those deductions from the employee's paychecks. And then the last one we have on here is researching federal and state regulations. And that's a biggie because they change and they change all the time. And there's 50 states and each state does everything a little bit different. So especially if you're a multi-state employer, oh my gosh, it's a huge thing to have to keep track of all of those laws on top of the federal laws. What's fun about payroll laws is that the feds have their law, and then the states can have laws on top of that. The states can be more strict than Fed, but not less strict than Fed. So you may have a state that doesn't have any additional laws above and beyond federal, but you may have a state like Colorado where overtime is not only after 40 in a week, it's also after 12 in a day. So those additional items are also things that the payroll department and payroll professionals have to keep track of. Makes it very complicated. So again, we just talked about this. It's very challenging. It's always changing. It's very complex. So there's many federal, state, and local laws and regulations that affect the way that companies pay their employees that are working, and they change frequently. So makes it very tough. They must communicate to their employees, and it's hard. So, you get people that either haven't worked before or haven't really paid attention to how their paychecks are calculated, and you go in and try to explain it to them. And especially as we get into calculations of pay and things like that, it's a challenge to explain to employees how you came up with the amount to withhold from their paycheck for federal taxes. FICA and Medicare or Social Security and Medicare are a little bit easier because they're just a flat percentage as long as the employee has not made over the wage limits for those taxes. But if it's federal withholding, there's a whole big calculation, which we will look at in depth in a couple of weeks, that you have to be able to explain to your employees, and that can be a challenge. Technology is also something that's always changing, and as we know, can be a challenge. The last year and a half, almost 2 years, have really changed the way that we all look at technology. At least I look at technology and use technology. And oh my gosh, I'm going on a year and a half of being on this Zoom camera instead of actually being in a room with people, and it's hugely different. So companies are coming up with a lot of different technologies and software ways to be able to track employee time and things like that that don't take physical pieces of paper because we're not all in the same room anymore. So that's huge. Also keeping records and making sure that those records are maintaining regulations and they are approved by the IRS to maintain records in electronic ways. So accuracy is huge. It's hugely important. And we all know that we want to be paid. We want to be paid on time, and we want to be paid accurately. And we all know that employees are not happy when they're not paid accurately. So it's hugely important that we are calculating their pay not only timely, but also accurately, and making sure that everything is processing correctly. So very challenging. Payroll is not something to take lightly, for sure. Okay, so just a quick little picture of payroll. Generally, the payroll process includes the employee. They are come on as a new hire, and that of course requires reporting from the employer to the state to make sure that they are reported as a new hire, so that the state can send any child support orders or withholding garnishments or anything like that to the correct employer. Then they have to, as the employee is no longer a new hire, but if there's a change, the payroll people have to process that change. They then have to input time data. They have to make sure they have accurate forms W4 and I-9. During the actual payroll process, they have to input the payroll information, the hours worked by the employees, all the pay rates, all the salaries, anything like that. They have to verify the payroll. They have to process the payroll. They have to distribute the payroll. They have reports that they have to reconcile, and all of that fun stuff. And then they have to make tax deposits to all of the government agencies, whether they're at the state, federal, or local levels. That we have to send at least every quarter. We have to send reports to every single agency. Some agencies require them more often than quarterly. And so that has to be done. And then employees have to receive forms W2 at the end of the year to show their earnings for the entire year. And then on a more ongoing basis, their pay statements. So it's a lot. We're going to talk really quickly, well, probably not really quickly because it's kind of a big topic, about worker classifications. This is a big one because as an employer, if you classified all of your workers as independent contractors, it would save you money because you have to pay certain taxes when your people working for you are classified as employees that you do not have to pay when they're classified as independent contractors. Because of that, a lot of people would like to make everybody an independent contractor. But I will tell you that if the state or the federal, the IRS finds out that you're misclassifying employees, the penalties are huge, especially if it's intentional. So you need to make sure that you're classifying employees correctly. So we have workers, and then we're either going to have employees or we're going to have independent contractors. And I'm going to show you the way that we determine whether they're employees or independent contractors. If we determine that they are employees, we also have a couple different levels, whether they are exempt employees or non-exempt employees. And that goes into the Fair Labor Standards Act and which employees are covered by that and which are not. So this is just a big overview. We'll talk more in depth about it as we go along. It's kind of a big slide, but like I said, this is a huge topic. So whether you're classifying your employees as independent contractors or actual employees is very important. And it's the responsibility of the employer, not the worker. So somebody doesn't come up to you as the employer and say, well, I'm an independent contractor, not an employee. That is not the person that makes the determination. And the reason for that is the employer is the one who's going to have to pay penalties, interest, anything like that, should the employee or the worker be misclassified. So it is the employer's responsibility, not the worker. So there are two tests that can be used: the common law test, which is the most common one, and then the reasonable basis test. So under the common law test, a worker is a common law employee if the employee has the right to control what work will be done and how that work will be done. However, if an individual is subject to the control of the company only as to what results are to be accomplished and not as to the details by which those results are accomplished, the individual is not an employee. So we'll talk about some examples of this to make it more clear in your head. The other way is the reasonable basis test. So employers may treat workers who would be employees under the common law test as independent contractors, exempt from federal employment tax laws if they have a reasonable basis for doing so. So a reasonable basis is defined by Section 530 of the Revenue Act of 1978. And a reasonable basis may consist of one or more of the following. So these are kind of the ways that you can use the reasonable basis test to classify someone as an independent contractor. Based off of court decisions, published IRS rulings, IRS technical advices sent to an employer, or a private letter ruling from the IRS to an employer indicating the worker is not an employee. That letter that you would get from the IRS is called the Form SS8, and it's a determination of worker status for purposes of federal employment taxes and income tax withholding. So you can actually ask the IRS basically whether the person that you are having as a worker should be an independent contractor or an employee. So another way is a past IRS audit of the employer not resulting in a finding of taxes owed or a penalty attributable to the employer's treatment of the worker as an independent contractor. So if there's been a previous IRS audit of you as the employer that said you treated this person as an independent contractor before you were audited and you were not assessed any penalties due to you treating them as an independent contractor, then you can continue to treat anyone in a similar position as an independent contractor. The other way is guidance from an attorney or a CPA who knows the business. Make sure they know the business and they know the business well. And then a longstanding recognized practice in a significant segment of the employer's industry of treating workers in similar situations as independent contractors. So basically, if it's the norm in the industry to treat them as independent contractors and you can substantiate it, then you can do that. Again, be careful because penalties and interest that come from this are pretty significant, especially if you're found to be intentionally misclassifying employees. So let's think back to the common law test, which is the first test that we talked about. And this is kind of, there's two categories here. So we have an employee category and then an independent contractor. So under the employee side, if the worker is required to comply with employer's instructions about when, where, and how to work, they're considered an employee. If, on the other hand, the worker sets their own hours, determines their own sequence of work, they can be considered an independent contractor. So if I'm given something that I need to accomplish and I'm told how I need to do it, where I need to do it, and when I need to do it, I'm an employee. But if I'm told I need to accomplish something and I get to do it on my own time when I want to, I can determine how, when, and where I do the work. That's independent contractor. If the worker works exclusively for the employer, they're an employee. If the worker can work for multiple employers or their services are available to the public, they're an independent contractor. For example, if you are trying to think of a good example here. If you work, say like maintenance, if you're a maintenance person, but you work specifically for your employer, you only do work on their property 5 days a week, versus someone who owns a landscaping company and they come and do landscaping outside of your business for a few days. Those are different. Independent contractor versus employee. Employees are hired by the employer. Independent contractors are self-employed. Employees can be fired or subject to dismissal, and they can quit without liability. Independent contractors have a contract that governs how the relationship can be severed. Employees have a continuing relationship with the employer. Independent contractors just work by the job. So they have a job that needs to be done. If it's done in 2 days, great. If it's done in 2 months, great, but it's still job by job instead of working for the employer with a continued relationship over time. Employees, the work is done personally Independent contractors are permitted to employ assistants to help them. As an employee, you perform services under the company's name. As an independent contractor, you perform services under the worker's business name. As an employee, you are paid a salary, you're reimbursed for expenses, and you can participate in the company's fringe benefit programs such as health insurance, disabilities, life insurance, things like that. As an independent contractor, you're paid by the job, and you have the opportunity as the worker themselves to profit or loss, depending on how long the work takes you and all of that good stuff. Employees are furnished tools, equipment, materials, and training by their employers. On the other hand, independent contractors, they furnish their own tools, equipment, and training. And it's a substantial investment by the worker on their own part to have all of those tools in their possession, so that again, they can work on multiple jobs with multiple different employers. If an outside salesperson company, if you are an outside salesperson and your company provides leads, sets terms and conditions of sale, assigns a territory, and controls the sales process, then you're considered an employee. On the other hand, you can be a salesperson and be classified as an independent contractor if you control the sales process and the terms. Okay. So worker classification determinations, we can put them into three kind of categories. And the first is behavioral control. So this is the right to direct or control the means by which the worker performs the work to be done. So if the employer is telling you when, where, what, and how, that's behavioral control. Financial control is who's making the significant financial investment in the job, who has the business expenses that are not being reimbursed, or who has made the services available to the general public. And then the relationship of the parties is the last one. So it's determined by examining how the worker and the employer perceive their relationship. If a Form W-2 was exchanged, then that means the worker was treated as an employee. All right, to end the day, let's do a little pop quiz. Again, reminder in chat, go ahead and put your name followed by your answer so that we can give you credit for participating with us today. So Food for You Inc. is a caterer, and they provide full party catering services. It hires bartenders and wait staff from a local union organization. Bartenders and wait staff supply their own uniforms. My question for you is, are these bartenders and wait staff employees or independent contractors? I must have bored everyone to death. Thanks, Dobby ladies. Thanks, Manon. Thanks, Katie. Yeah, I agree. Employee for sure. A little bit different, and this one's a two-parter. So Elizabeth's Auto Mart provides a garage with 2 bays for Diane to perform car repair services. Diane provides all of the supplies needed to perform all of Elizabeth's auto work needs. Diane also solicits business from insurance adjusters and others. Diane hires her own workers, sets their work hours, and can fire them for poor performance. All repair prices are determined by Diane, and she receives a percentage of the gross revenue of the work completed at the shop. Any uncollected charges are Diane's responsibility. Again, two-parter. So let's first talk about Diane. Her relationship to Elizabeth's Auto Mart. Is she an independent contractor of Elizabeth's Auto Mart, or is she an employee of Elizabeth's Auto Mart? You guys are awesome. We're going to call her an independent contractor. Now let's talk about Diane's workers. I would agree. You guys are awesome. Diane hires them. She sets their work hours. She can fire them if they're doing poorly. I would say that Diane hires employees and Diane is an independent contractor for Elizabeth's Auto Mart. Does that kind of make sense? Okay.
Yeah.
Perfect. So it's 12:54 and the next slide is super, super long. So I'm thinking maybe this is a good place to stop. Although it's not terrible, let's do one more. It's just the reasonable basis test. So basically it's just if by the common law test, the employer, the worker could be considered an employee, you can use the reasonable basis test to say, no, they're an independent contractor. Again, from a personal standpoint, I'm going to say this is more risky, but if there's IRS court rulings or audits or recognized practices in the industry that say that people that are doing this type of work in the industry are being treated as independent contractors, then you do have the ability to say that you're going to treat them as an independent contractor. You just have to be careful and make sure that you can substantiate why you're doing that in case you do get audited by the IRS. In the case that you did get audited by the IRS, as long as you had your reasonable reasons for treating the worker as an independent contractor versus an employee, if they still determine that you misclassified, you still may be subject to some penalties, but it's a lot less than if you were found to be doing it on purpose. So make sure that if you do accidentally misclassify employees, it is truly an accident and that they're not going to come back and say, no, you did it on purpose. So, all right. I think that's a pretty good spot to end today. Are you guys okay with that? Are you tired of listening to me? I'm tired of talking.
Yeah, you were wonderful.
Okay. Like I say, I did make some adjustments. If you had the PowerPoint that Manon sent out to you guys, I did make some adjustments. I apologize that it was last minute. I was in Alaska until yesterday. So I was a little bit behind on that, but I'm back. And so I'm going to finish up the PowerPoint, making some adjustments to the rest of it that I will present tomorrow. And then Manon will send that out. And then she also is amazing and will send you guys the pre-test with the answers. And you guys can do a little test and see how you're doing before we present the information. And then hopefully at the end, you will have learned some stuff and you can take that test again and we'll do better. So, questions, concerns, rude gestures?
No. Okay. Thank you, Melissa.
You're welcome. Thank you, ladies. I will see you all tomorrow and talk to you tomorrow. Okay.
Bye.
Bye.